Good evening, I'm Eugene Chan with Straight Talk. Our guest tonight is Ms. Amy Low, the chairman of the Private Wealth Management Association. She's active in the development of the Hong Kong private banking industry with over 30 years of experience. Ms. Low is also head and CEO of UBS Hong Kong. Tonight, Ms. Low is here to tell us if Hong Kong is facing the risk of capital outflow. Welcome, Amy.
Thanks, Eugene, for having me.
Amy, in the last few years, Hong Kong been through some very trying times. We had social unrest leading to riot in 2019, and some observers were saying that some of our money may be flowing out to the other Asian market. But luckily, in a publication by the Financial Services Development Council in 2020, that Hong Kong status as a hub is still intact. But in the last 2.5 years, look at the COVID situation we have in Hong Kong, and also the border travel, which is a bit cumbersome compared to other cities. There are also talks again of capital outflow from Hong Kong. Is that true?
Actually, there are no signs of any significant capital outflow from Hong Kong. Perhaps let's look at objectively some number. If we look at the total deposits in Hong Kong for 2021, it grew by 4.6%. And you may ask, how about this year? Because this year is quite a challenging year.
Yep.
Actually, the total deposit still grew by 1.4%. So the numbers speak for itself.
Right. So that means it's a very reassuring word to the viewers that there isn't a real capital outflow from Hong Kong from an objective point of view. But what are your high net worth clients doing? What else? How are they investing their money?
Obviously, in this changing market situation, all along we said diversification, and also proper asset allocation. As a matter of fact, what we have also observed is also our clients' interest in alternative investment space, particularly, for example, some of the private market, private equity, that also get good traction. But at the end of the day, it's diversification, because volatility is definitely here to stay.
Right. Last week we had Chris Hui from the government, and previously we had Dr. Rocky Tong from the Financial Services Development Council, and they both felt that they're quite confident with Hong Kong's status as an international financial center, despite all the challenges. So you are from the private sector. I'm sure you know exactly what the front lines are feeling. So what is your assessment? Is Hong Kong still a very solid financial center? Of course, we are ranked number 3, but what is it in reality?
And I do believe Hong Kong remains as an international finance center. As you mentioned earlier, look at the Global Financial Center Index report. We rank number 3 after New York and London. And also, I think Hong Kong is also very uniquely positioned to be the hub connecting China and the rest of the world. And because China is a big growth market. And so that's also important. And that's also partly the growth driver. Mm-hmm. So, and if you look at also, again, objectively, look at the Hong Kong Stock Exchange. Actually, 43% of the investors are international investors. So it's also quite international. And also the fact that banks like some of the international banks, the international corporate, they also have strong presence in Hong Kong, plus also investors. So I think Hong Kong is still well positioned as an international finance center.
Right, and we are ranked number 3 behind London and New York. But how about Hong Kong on its own? We often compare with, say, Switzerland and Singapore, say, for wealth management center, which is your forte. How are we faring compared to those 2 competitors?
Obviously, I think both Hong Kong, Singapore, and also Switzerland are important wealth management hub. And I still believe Hong Kong has its competitive advantage because proximity makes a lot of difference. Mm-hmm, mm-hmm. And that's also one of our competitive edge. And especially, we also have the Great Bay Area behind us. Because the Great Bay Area, we're talking about 11 cities, 70 million people, plus 1.7 trillion GDP. So that's significant. And actually, what we've been talking to some of the big corporate, that's a bit of game changer, because in the past, when they want to penetrate into the China market, they will automatically and naturally think of going to Beijing and Shanghai. But now with such a big market, the Great Bay Area, Hong Kong is also at the heart of this Great Bay Area. I think that also plays at the strength of Hong Kong. And that's why I said proximity makes a lot of difference, because within that 11 cities, it's all 1 hour by travel from Hong Kong.
So what you're saying that people in the last few shows, we often have to refer to Singapore because it's been mostly mentioned in the media. So in your opinion, we are not at any risk of losing any of our work to Singapore in a substantial way?
As I said, I think both are also important hub, but Hong Kong certainly also has a competitive advantage. I think the other thing is also, again, you know, I like to look at some of the number.
Yes.
Hong Kong is also the biggest renminbi offshore market. And you are talking about the liquidity pool is 800 billion renminbi. And that accounted basically for 46% of the renminbi settlement. That's huge, okay? So that's also something not the other center can replicate. And also on top, you have also different kind of connect scheme, and wealth management connect, stock connect, bond connect. And so that also helped to facilitate all these kind of activity there.
Right. Amy, let's move on to another, your strength, which is on wealth management, because you've been in the industry for like over 30 years. After 2019, some has reported, because of the implementation of the national security legislation, some of our wealthy Chinese individuals aren't using Hong Kong as a wealth management center. Is that a fair comment?
As I said, because every year, the Private Wealth Management Association, we conduct a survey among all the members bank. We have 45 members bank. These are all the global and local and regional bank. So clearly, one of their priority market, actually, as a matter of fact, is the #1 priority market is China. Everybody is saying China is the #1 growth market for them. And so, and one thing very interesting, perhaps you may not know, we recently also did a study about where the regional head of wealth management sitting. The kind of banks where the wealth regional head, and actually 2/3 of the regional head of wealth management business, they are based in Hong Kong.
Right, that means Hong Kong is the place where
Hong Kong
business is.
And often I would say, when the soil is fertile, everybody wants to farm here.
All
this is still definitely the
Still the
battlefield. And as I also alluded to earlier, the proximity, and also having the similar kind of cultural background, talking in the same language, certainly will be helpful. And again, if I we've been dealing with a lot of our clients from mainland, the investors from mainland, what they're looking for, 3 areas. One is investment. On the investment side, do you have also some of not just the local, but global investment opportunity? And I think that's what Hong Kong can offer. Then the other one they are looking for is obviously business, because a lot of them are entrepreneurs themselves. How we can help them to grow their business. Then they also look at Hong Kong having a robust capital market opportunity that attract them to be here. Okay, and finally, it's also they're looking at family succession planning, because obviously with the wealth, they want to preserve the wealth and grow the wealth and transfer to the next generation. Again, I think Hong Kong, having so much experience dealing with intergenerational kind of transfer and also multi-generation transfer of asset, we have a lot of seasoned professionals. And that's why a lot of them come to Hong Kong and ask us also for some of the structure structured kind of family advisory services.
Right.
I think
So,
that
Amy,
again play onto our strength.
So before we go to the break, I think people are concerned is with all the geopolitical tensions. I mean, there's a lot of pressure between U.S. and mainland China. Do you feel there are less investment into China from foreign investments, therefore making Hong Kong as a financial hub less important? Do you feel that at all?
Yeah, as I said, volatility definitely is here to stay. As an international finance center, you will see this kind of volatility.
Right.
I think what's most important is to focus on the opportunity. That's the reason why I said, if you look at why a lot of the banks still want to invest in Hong Kong, quite a number of banks said they want to increase their headcount, not elsewhere, but in Asia-Pacific region, and particularly also still in Hong Kong because of the growth opportunity they've been seeing.
Okay, let's take a break and don't go away. Welcome back. Thank you for staying with us. Amy Low is with us tonight, and she has been talking about capital flows into Hong Kong and how Hong Kong attracts and manages that wealth. So Amy, in the first part, you have given us a very positive view that Hong Kong's strength is still there, and it's just turbulences, it's just part of the volatility. So I'm sure the viewers will be very much relieved. So let's look to the future. What will be the factors that you think will keep on Hong Kong growing as an international financial center? Which areas do you think we must put focus on?
I think a few areas. As I said, I still believe Great Bay Area is a very important differentiator and competitive edge for us. And along that line is also our kind of growth of the family office. Obviously, the wealth creation and also grow organically in the region is important, but at the same time, it's how we're going to attract some of the international global family offices in US, in Europe, in other parts of the world to Hong Kong, because when the family offices come, the rest of the service provider, like the asset management, the fund manager, the trusts, they will come. Okay,
so the benefit of a family office is multifold.
It's multifold, and that's the reason why actually the Private Wealth Management Association a few years ago, we did a white paper to the government, and one of the key recommendations is also focus on the family office, but that's the future growth. Mm-hmm.
So with the government's input, can Hong Kong really become the family office hub?
Obviously, the opportunity are definitely there because to be a family office hub, you have to be also an international finance center that will offer all this kind of platform opportunity to the investor and to the family offices. And as I said, what they're looking for is also the people, the platform, and also the offering and the services. Yeah. And we have all the ingredients here in Hong Kong.
I read from Invest Hong Kong, they have set up a specialized team called the Family Office Hong Kong to support the setup of family offices here. So since their establishment, has the actual numbers grown since they have established?
First of all, I would like to thank the government to hear from us, because that's also our recommendation in the white paper, to set up a family office liaison office. And that's exactly what they did with the setup of the team, because that's very important, because that acts as a one-stop shop for all the family offices when they come to Hong Kong, how we can facilitate the setup of the family offices and link them to the rest of the other services and also to the rest of the world, because I think Hong Kong, one of the important roles is to be the super connector there. So I think working closely with the team, we are delivering the kind of objective.
Right.
Slowly,
Just now you mentioned Singapore. In one of the recent study from a UK-based group, they're saying Singapore has been seen as more of a preferred place to go because people's concern of how Hong Kong is handling of the pandemic, as well as the personal freedom. So, do you think Singapore has any edge over Hong Kong in this family office hub business?
as I said, Hong Kong and Singapore are both an important hub. And for a lot of the investors, they are diversifying beyond just asset classes, but also geographic kind of region. I still believe Hong Kong has the competitive edge and also much to offer, because at the end of the day, what they're looking for is also investment opportunity, where they get the biggest investment opportunity and where the growth is coming from. So I still believe Hong Kong has a lot to offer. And I've been in the industry for over 30 years. I've been also seeing quite a number of ups and downs. And interestingly, Hong Kong is also very resilient. And every time emerge even stronger. So there might be some ups and downs, but so long as we focus, what are the main drivers? As I said earlier, first one is the GBA, the Great Bay Area, and the family office. Second is also ESG. Because I often have been telling our team, if you look at what's one agenda that no matter the government, the regulator, the corporate, the investor are interested in, is the ESG sustainability. This is a mega trend. The train has left the station. So I think it's good to see the government also put in a lot of effort in positioning Hong Kong as a sustainable hub. And I think that's the future growth. And last but not the least is also Hong Kong as an innovation hub. And if you look at, for example, the biotech fundraising, Hong Kong is the biggest in the region. And while you see a lot of the IPO activity slowing down, interestingly, talking to the stock exchange, they said they have busy pipeline. And from beginning of this year till now, we have over 30 companies, biotech companies, applying to be listed in Hong Kong. So the pipeline are there. That's why I said, what we have to look at is more the opportunity rather than some of the short-term challenges.
Amy, you're saying that apart from our natural proximity to the mainland, which offers a great advantage, and the talented people or professionals that we have developed over the last years, you also mentioned about the Greater Bay Area. We have the innovation, which Hong Kong under the National 14th Five-Year Plan, we will be the international innovation and technology hub. And you talk about green and sustainable finance, on sustainable ESG. Then how about the latest topic that we actually touched on last week with Chris, is on virtual assets, which is a very common, maybe sort of the flavor of the time. But I understand Hong Kong has a regulatory framework since January this year. And I mean, as usual, Hong Kong framework is very strict, a very high standard. Do you feel there's enough flexibility in there for you to market the products to your clients? Because other places may not be as strict. So what do you think?
Look, first of all, I have really seen increasing interest in virtual assets among our clients, be it the investor, high net worth, and also some of the family offices, because basically they treat it as an alternative asset classes, okay? And, but one thing we also have to segregate is that crypto doesn't equal to virtual asset. Crypto is just one type of the virtual asset. What most of our players, the industry players, are interested in is the underlying blockchain technology. And as you said, we are glad that the government issued the guidance notes back in January to provide the framework and how banks are dealing with all this activity relating to the virtual asset. And we've been giving them feedback. As a matter of fact, right now, Private Wealth Management Association is preparing a position paper on the virtual asset. And I think it's important as an industry how we are going to work together with the regulator to define the framework that will allow Hong Kong to accelerate and also to really position ourselves advanced blockchain kind of technology and adoption. I think that's the most important part.
I think the viewer will be very happy to hear that, because we need to be at the forefront.
Yes.
So let's look at some basics again. We are talking about all these the trends with the COVID travel restrictions, and also with some of the talents leaving Hong Kong. We had Secretary Chris here last week, and he said he has reflected to the chief executives the importance of, I mean, a more friendly travel restriction because of the pandemic. So I'm sure you have shared that same thing to relevant authorities. From your colleagues, how bad has this restriction been affecting our business in Hong Kong? Maybe you can tell the viewers.
Yeah, I think obviously the travel restriction has impacted many industries, and finance is of no exception. We have been also having regular dialogue with the government, with the regulators, giving them feedback, giving them suggestion. And I know that they understand our concern. And
Are we heading in the right direction?
Yeah, I would say, looking at all the efforts and also with our recommendation, they are on the right track. And I do believe that they will further relax step by step.
Right.
Okay. I think it's important to keep that kind of dialogue ongoing because the situation keeps evolving.
Yeah. You know, as we said, Hong Kong has very well experienced professionals in Hong Kong that was Hong Kong's backbone in the financial industry. But we do hear that there are some talents have left Hong Kong. And Chris Hui was saying that he said the government has have some measures to retain them. So do you think the government has done enough, or do you have any suggestions to them?
Now, first of all, I would say the population fluctuation is normal and natural in any of the economy. And again, in my 30 years, I've been also seeing this kind of in and out, ups and downs. But what's more promising is that, because if you look at the population census report, if you look at is the quality and also the education level has actually improved. Right. And I think what's important is also training and develop the next generation of talent.
Amy,
I think this is a topic I'm very passionate about.
I can feel that. Amy, in the last 30 seconds of the show, as you know, government officials do watch our show and they hear your comments, and I'm sure they're very happy for you to thank them for listening to you, to have their private office concept with the IMF team helping set up a private office. So what will be your wish list for Mr. John Lee and his team from the 1st of July? And
our wish list will be primarily related to the opportunity I talked about earlier, and there will be three fronts. Number one is on the GBA, on the Wealth Management Connect, in order to increase the appeal, the attraction there, wide range of product, increase the personal quota beyond the 1 million renminbi, and also allowing, in due course, the advisory services, which play to the strength of Hong Kong. And second is the family office, because while we see further room to streamline the regulation for these sophisticated family offices, because they have a higher risk tolerance.
Another one?
And then the last one is talent development.
All right.
So continue to invest to develop and attract young talent.
All right, Amy, that's all the time we have. And many thanks to Ms. Amy Lo for outlining Hong Kong's continuing role as an important gateway for capital flows. That concludes our mini-series on Hong Kong's status as an international financial center, which has given us a positive outlook and outlined some of the challenges. Good night, stay healthy, and see you next time.